The four most dangerous words in investing are, "This time it's different." Sir John Templeton. Folks, day in and day out, we go over these charts. We review things that work. We have set up a plan for you to practice trade, to learn how to read stock charts. 10 to 15 minutes a day is all we ask. You're now getting the comprehensive review and forecast. We do this every Friday at the close of the market. If you have your worksheets, go ahead and pull out your weekly market worksheets. If you don't have one, want to know where to get it, look in the show notes. You'll see PDFs that you can print out. We very much encourage you to fill out the weekly worksheets, at least a trade worksheet every time you do a practice trade, and the daily worksheets if you want to supercharge your training and really get to understand what it is we do here. Think of the magic of being able to read a stock chart. What would that mean to you if you could accurately practice trade time and time and time again? Think of the power and the opportunity that would offer you. So let's jump into these charts and see what there is to see. Everything down for the day except bonds. They were flat. So we're going to jump first into the S&P 500. That's the 500 big international companies that make up the Standard & Poor's 500. We have an up week. At the end of the week, we haven't reached the prior high back on Friday, the week ending Friday the 20th of September at 302.63. We hit a high of 324 over the course of the week. Price percent oscillator is about flat. Derivative oscillator has gone positive. We've pushed through our prior down trend line on the weekly chart, but we don't have a crossover, so we don't have an up play at this point. We go to the 2-day chart, and of course we do have a 2-day crossover. We saw it look like it would be forming over the course of the past day back on Thursday, and it has finished forming, and we will go ahead and acknowledge that. We will redraw our trend line. We will mark the 2-day vertical crossover. Those typically occur before there is a weekly crossover, but it doesn't mean there's necessarily going to be a weekly crossover. But we'll go ahead and reset our chart and show that we have a 2-day crossover going up. So now that we have this bit of schizophrenia, the weekly chart is down. The biggest of our charts is down, biggest time frame. And our intermediate time frame is up. We don't have a trade on the S&P. We're just waiting to see how things sort themselves out. Do note that the price percent oscillator has crossed over. Derivative oscillator's not gone positive at this point. What do we see happening with the 4-hour chart? It's actually going down. Hasn't crossed over going down. Been going up for quite a while. Flat, well, up until it topped back on Thursday the 17th in the morning, and then really started heading down for the last day and a half. We'll just wait and see how these charts sort themselves out. Do not have a trade at the end of the week, so we will, and sure don't have a weekly vertical crossover yet, so we'll just continue to watch, monitor, see what there is to see. When you don't have a trade, guess what? You don't do a practice trade. You just don't do it. You just keep your powder dry. One of the nice things about not being a professional trader on Wall Street, who many times has to trade, we're going to let the trend and the charts lead us in what we do. We are trend followers. Now, let's move on to the Nasdaq 100. What do we see going on there? Just like the S&P 500, we see a green up candle, and it doesn't appear that we have reached a higher high than the previous high. That was 195.18 is what it looks like. Looks like the highest. Yeah, 195.18. How high did we get? 194.50. So close to that prior high. Do have a green up candle that's formed. Price percent oscillators turn positive. Derivative oscillators turn positive. Price percent oscillator has not crossed over yet. So again, don't have a weekly vertical crossover. We go to the 2-day chart, and it crossed over going up back on the 2-day candle ending, representing Tuesday the 15th and Wednesday the 16th of October. So again, we have that divergence between the fact that the weekly chart is still confirmed down, the 2-day chart, the intermediate chart is up. We look at the 4-hour chart, we can see that it's going down decidedly, down almost 8% for the day. Things appear to have topped out back on Thursday morning, just like they did on the S&P 500, getting close to crossing over, going down on that 4-hour chart. Doesn't really mean a lot to us right now. Why? Because that 2-day chart is in a confirmed up move. It's going to have to rotate over, going down in the same direction as the weekly chart before we would consider an entry point. So we'll continue to watch, see how this next week develops for stocks. Let's take a look at bonds. Back to the weekly chart. We have a down week. We've been talking about this all week. The wick on the bottom of our solid red down candle. And again, that typically shows a strong downward trend. We have no wick on the top, which is good for continued down movement. We do notice, though, that the wick on the bottom has not struck as far down as it was back on the week ending the 13th of September and even the 20th. So again, things are moving down. Derivative oscillator gaining downward momentum. Price percent oscillator continuing to pull away from the red signal line. So we're seeing continued momentum, continued pushing down of the price of 20-year bonds. We look at our 2-day chart, and of course we close with another red down candle. The body's lower, as is the wick. It looks like the low was 139.30, 139.35. So actually the low was a little bit lower on the prior candle. Now we like to continue to see acceleration. We are seeing the derivative oscillator gaining downward momentum and the price percent oscillator staying basically at the same angle with continued down movement. As we said, for the day on Friday, price was flat according to our charts, and we see things, I mean, how long has this been going on? Since the afternoon, since the morning of Monday. So all week long, bonds have sort of hung out around the same level. Price percent oscillator is about flat on the 4-hour chart, and we can see that the derivative oscillator continues to lose downward momentum. So maybe a change is coming. What is that telling you if you jumped into that down trade in the afternoon around the 143, 144 mark back on Wednesday, the 9th of October? Well, it's telling you to pay attention. Things might be turning around, or what might be happening. Well, particularly if you look at the 2-day and the weekly chart, it does show you that there's still downward pressure on the price of 20-year bonds. So you might want to keep your powder dry. If you want to stay in that practice trade, you can sure do so. But again, be cautious as to where things are either bottoming or, after all those losses, things are just consolidating, getting ready for further down moves. Keep your eye on things, see how the week starts out. Now, lastly, we're back to the weekly chart, and we are looking at gold. Gold was down for the day 0.11%. What do we see going on with gold? Sort of similar to what we saw on bonds. We haven't reached a lower low this week. We do have a red down candle where the body is lower than the prior weeks, and we see the derivative oscillator gaining downward momentum. Price percent oscillator continuing to slowly pull away from the red signal line is what you want to see with continued down movement. The 2-day chart is again a bit squirrely. It is below the 2-day and the weekly trend line, although the upper wick did press through it. Derivative oscillator still negative, price percent oscillator heading down, but we do have a green open box candle. Looks like there's a little wick on the bottom and a wick about twice the width of this very thin green open box candle on top. So again, there's a little bit of upward price pressure there, but the nice thing is the derivative oscillator is still negative and the price percent oscillator is still negative. We look at the 4-hour chart, and we can see where we had 2 days of upward movement, and then over the course of this past day, a sideways slide heading down a little bit, had a crossover going up back on the morning of Thursday. So maybe price is moving, bouncing off almost laminated 2-day and weekly trend lines. Just keep your eye on gold. Remember, we are still in a confirmed down move on both the 2-day and the weekly. And particularly if this 4-hour chart crosses back over going down, might give you an entry point for further down movement. It may accelerate up. So we'll keep our eye on things and see what there is to learn from gold. None of it really super positive at this point as far as where direction is, where things are going. And again, it doesn't hurt to just continue to monitor, see what's going on, wait for clear and concise signals if you wish to. If you wish to practice trade any of the possible trades that open themselves up to you, don't hesitate to do that. But as we say, when you have a trade that looks like something that is imminently doable, then of course you want to emotionally invest yourself in that practice trade like you were using real money to really get the feel for what is going on in that practice trade. If you're doing experiments, mark them down as experiments. Do not pat yourself on the back. If things go well in that, like something you would do in the actual market, realize it's simply an experiment. Write it down as that. Learn from it. And don't beat yourself up if you lose on it, okay? So again, it's important to practice the way you in someday wish to play. It's very, very important to practice the way you want to play. Folks, that's where we are as we end the day. If you don't have our book, the 13th edition is coming back from the printers. I was hoping it'd be here on Friday, should be back on Monday, and we will be sending out and filling all those orders. You want to get in line for the 13th printing. We have an autographed copy that will be sent to you. We would sure like you to follow the link in the show notes. If you happen to live overseas and want to buy it, simply email us, cw@chartingwealth.com. We'll send you a PayPal invoice. Pay it. We'll ship your book to you wherever you are in the world. Appreciate all of our Patreon members. Thank you so much for your support and help at the channel. Lots of great trainings for you. And don't forget, friends, if you are a subscriber, and again, you can do that for free. All you have to do is go to chartingwealth.com and sign up, put in your name, email address. Things will get to you. You'll get the daily reviews, the weekly reviews, and of course the special trainings. Did one yesterday for you guys using indicators to interpret crowd sentiment. Using indicators to interpret crowd sentiment. I think you will very much like that. We go through the indicators and what they tell you and why, and how you can use all the different things on our charts, from the Bollinger Bands to the Heikin-Ashi candlesticks to the price percent oscillator, the derivative oscillator, and Bollinger Bands, trend lines. Yeah, I think that's everything. So got that ready for you. It'll be in the link, will be in your show notes if you are a subscriber at chartingwealth.com. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.